Welcome to Support Navigator. Today, we're tackling a topic that confuses millions: understanding the difference between Supplemental Security Income, SSI, and Social Security Disability Insurance, SSDI. If you or a loved one are facing a disability and need financial help, knowing which program is right for you can make all the difference. Many people miss out on the benefits they deserve simply because they don't know where to start or which program to apply for. Don't let that be you. In this comprehensive guide, we'll demystify SSI and SSDI, break down their eligibility requirements, and help you determine which path leads to the support you need. Stick around, because by the end of this video, you'll have a clear roadmap to your disability benefits. Let's start with SSI, or Supplemental Security Income. SSI is a federal income supplement program funded by general tax revenues, not Social Security taxes. It's designed to help aged, blind, and disabled people who have little or no income and resources. Think of it as a needs-based program. The goal is to provide a minimum level of income for basic necessities like food and shelter. Unlike other Social Security benefits, you don't need a work history or work credits to qualify for SSI. It's purely based on your financial need and disability status. So, who qualifies for SSI? The main criteria are: first, you must be aged 65 or older, or blind, or have a qualifying disability. Second, and this is crucial, you must meet strict income and resource limits. For 2025, these limits are generally quite low, designed for those with minimal financial means. Resources include things like cash, bank accounts, stocks, and property, though your home and one vehicle are usually exempt. Third, you must be a U.S. citizen or a qualified alien. The application process involves demonstrating your disability and providing extensive financial documentation to the Social Security Administration, or SSA. Now let's turn our attention to SSDI, or Social Security Disability Insurance. Unlike SSI, SSDI is an insurance program. It's funded through payroll taxes that you, your employer, and self-employed individuals pay into the Social Security system over your working life. Think of it as a benefit you've earned through your contributions. When you work and pay Social Security taxes, you earn work credits. These credits determine your eligibility for SSDI. Similar to how car insurance works, you pay premiums, and if you have an accident, you get coverage. SSDI provides benefits to you and certain members of your family if you've worked long enough and recently enough, and have a medical condition that meets the Social Security Administration's definition of disability. To qualify for SSDI, the primary factor is your work history. You need to have accumulated a certain number of work credits, typically 40 credits, with 20 of those earned in the last 10 years ending with the year you became disabled. The exact number of credits varies by age. For example, younger workers need fewer credits. The other major criterion is meeting the SSA's strict definition of disability. This means your medical condition must prevent you from doing any substantial gainful activity, or SGA. That's roughly defined as earning more than a certain amount per month, which is updated annually by the SSA. For example, in 2024, this amount was $1,550 a month for non-blind individuals. It's crucial to always check the official SSA website at ssa.gov for the most current figures, as these amounts can change. And for blind individuals, the SGA limit is typically significantly higher. The application process for SSDI is heavily focused on your medical records and how your condition truly impacts your ability to work. Now, let's highlight the key differences between SSI and SSDI, as this is where most of the confusion lies. First, funding. SSI is needs-based, funded by general tax revenues. SSDI is an insurance program, funded by payroll taxes. Second, eligibility. SSI requires limited income and resources, and you don't need a work history. SSDI requires a significant work history and earned work credits. Third, benefit amount. SSI has a federal maximum benefit, which is the same for most recipients, though it can be supplemented by states. SSDI benefits vary greatly based on your average lifetime earnings. Fourth, dependents. SSI generally doesn't provide benefits to family members based on your claim. SSDI may provide benefits to certain family members, like spouses or minor children, based on your work record. Fifth, Medicare/Medicaid. SSI recipients generally qualify for Medicaid immediately. SSDI recipients typically become eligible for Medicare after a 24-month waiting period. So, which one is for you? Let's look at some common scenarios. If you're a young adult who became disabled before you had a chance to work much, or if you've never worked and you have very limited income and resources, SSI is likely your path. If you've worked for many years, paid Social Security taxes, and then became disabled, SSDI is probably your fit. It's also possible to receive both SSI and SSDI if your SSDI benefit amount is very low and you still meet SSI's strict income and resource limits. This is called concurrent benefits. Remember, the key is understanding your work history and your financial situation. Applying for disability benefits can be a lengthy and complex process. Here are some crucial tips to maximize your chances and avoid common pitfalls. First, gather all medical evidence. This is the most critical step. Get detailed reports from all your doctors, therapists, and specialists. The SSA relies heavily on objective medical evidence. Second, be honest and detailed. Provide complete and accurate information about your condition and how it affects your daily life. Don't exaggerate, but don't downplay your symptoms either. Third, don't give up after initial denial. Most applications are denied at the initial stage. There are multiple appeal levels, and many successful claims are approved on appeal. Fourth, consider professional help. A disability attorney or advocate can significantly increase your chances of approval, especially during the appeals process. Finally, apply early. The process can take months, even years. Don't delay if you believe you qualify. Fourth, consider professional help. A disability attorney or advocate can significantly increase your chances of approval, especially during the appeals process. Finally, apply early. The process can take months, even years. Don't delay if you believe you qualify. As we stand in July 2025, it's vital to stay informed about potential shifts in disability benefits. The Social Security Administration's financial health, particularly the DI Trust Fund for SSDI, remains a frequent topic in Congress. While no immediate cuts to current benefits are expected, discussions about long-term solvency, such as potential adjustments to the retirement age or payroll taxes, could affect future generations. For SSI, the 2025 Cost of Living Adjustment, or COLA, will soon be announced, directly impacting benefit amounts for millions. There's also ongoing emphasis on work incentives for beneficiaries, with continuous efforts to refine programs like Ticket to Work to help those who are able return to the workforce. Staying updated directly through ssa.gov is always your best strategy. If this video helped you, please like, subscribe to support Navigator for more essential guides, and hit the bell icon. Have more questions? Share them in the comments below. Your input helps our community grow. Thank you for watching. Support Navigator is here to guide you every step of the way.